Good morning. Today is Monday, June the 5th. The time right now in Singapore is 11:11 in the morning. And just a bit of a recap as to what happened over the weekend itself. We have, of course, last Friday, the release of US job numbers. It came in much better than market expected. Market was expecting new job creation of about 170,000 in non-farm payroll, but the number released was more than double to 339,000 new jobs created. So that was a surprise, and the unemployment rate actually rose from 3.5% to 3.7%. So it's a little bit of a contradictory data because we have more jobs that are being created. At the same time, we have higher unemployment. So most of the new jobs that are being created most likely is in the service sector, because we are right now in the middle of summer, and most summer jobs are concentrated in the service sector. So we will have to see how this thing pan out, but the number was a surprise. And now it seems that the market is expecting going into next week, the FOMC, which is the Federal Open Market Committee meeting, the Federal Reserve will have to decide whether it is going to continue to hike interest rates or they're going to take a break from the rate hike cycle. Now, the market is a little bit mixed going into last week trading. At the beginning of the week itself, market participants are still thinking about a possible quarter point hike in the Fed fund rate going into the June 14 FOMC meeting. So now, after the non-farm payroll, market now expects maybe the Federal Reserve would be likely to pause. What the new word they have been using among the Fed official is the word skip. So skip and pause essentially means the same thing, meaning to say that the central banks is likely to take a break from hiking interest rates. But there is a very subtle difference between the two language. I think from my understanding, by using the new word skip, I think what they are trying to do is that they are telepathing to the market that they are likely to pause during the upcoming FOMC meeting, but they do not want to see an escalation in asset prices, meaning to say that they do not want to see a runaway stock market, which may actually cause asset bubbles, which we are already seeing bubbling up in the tech sector here. So this is I think that the message the Federal Reserve want to send out to the marketplace, whereby if and when they pause, they do not want the equity markets to rally higher than what it has already done. So this is, I think, the message. So going into this week itself, at least for today, I think the market may have enough momentum to extend the rally that we saw on Friday. Now, as far as the Dow Jones is concerned, now the entire week of last week, the market was basically not doing very much. You can see the market was just hovering just around the 33,000 levels without really having any incentive to either go down or go up. But on Friday, the non-farm payroll number was released. You can see this major run-up in equity prices in the Dow, causing the Dow to actually rose 2% on that day itself. This is the highest among all the major equity index for last Friday. So we can see the highest traded in last Friday itself was 33,805. Now that means the market is likely to challenge the May high, which is at 34,257, or even the year high at 34,342. So between these two levels, I think the market may have incentive to actually go and test it. Whether it can test it, we do not know, but I think the momentum is on the buyer side, so likely to see an extension of the rally that we saw on Friday. Okay, but in the S&P 500, we can see the S&P 500 has been going up throughout the week itself, and Friday's non-farm payroll gave it another boost. Now the price, the index itself in the S&P 500 is just hovering below the 4,300 levels. Now this level is actually very crucial right now. Going forward, there is a likelihood of profit taking coming in. This level is just trading below the last August high of 4,325. So again, like I say, this bracket of prices between 4,240 to 4,340 may actually see some kind of profit taking going that may take place. Okay, if and when it does take place, we may see the price coming back to about 4,160 to 4,167 levels. So do watch out for the possibility of a pullback in the early part of this week itself. Okay, in the Nasdaq, of course, we saw Nasdaq has been powered higher by tech stocks, essentially led by the FANG stock, and in particular the new darling of the tech market, which is NVIDIA, prices right now is hovering just under 14,600 points. And again, this area is actually quite vulnerable in my opinion. If the market do not take up 15,265, I think the market may actually pull back. Whether it will result in a total reversal, we do not know at this point in time, but we will have to say, or rather I would have to say that this level is actually very vulnerable for profit taking. So do watch out for that possibility here. Over in Asia, we can see that the Nikkei this morning has a bump up in prices. Now it's trading above 32,000 for the very first time since July of 1990. This is actually a 33-year high. So going forward, the immediate upside target will be the June 1990 high, which is at 33,345. So maybe it have enough momentum to test this level going forward this week. But we have to see. I am not comfortable chasing this market ever higher because the fundamental in Japan is all wrong, and this market has been rallying on the fact that the BOJ is maintaining its very loose monetary policy, but at some point they will have to decide it is going to be advantageous for them because the yield difference between Japanese interest rates and the US interest rate is tearing apart, and that means to say that there will be capital move between the exchange rate difference. Okay, so do watch out for a possible reversal in the Japanese equity market, but right now we don't see that. The market is technically very, very bullish. So like I say, it has enough momentum to test the 33,345 levels in the cash index. Over in Hong Kong, we can see that the market actually rallied on Friday, and this extend over to this morning trading. We are already at the midpoint of the day itself. Market traded to a high of 19,090 points. So now we are already cleared the 19,000 levels. Likely to see a market extending higher to test this pivot point at 19,521. Okay, so do watch out for this level here. It may attempt this level. If it cannot sustain beyond that, it may actually come back down again. So do watch out for the significance of 19,521. Over in China, we can see the CSI 300 is attempting to rally, but the rally has been a little bit weak so far. At most, I think the market will see some kind of resistance within the bracket of 3,894 to 3,920 levels. So between these 3,894 to 3,920 levels, the market may actually be capped. So do watch out for the possibility here. Over in energy markets, overnight, we have the OPEC Plus having their meeting yesterday, and the surprise news came in that Saudi Arabia, being the largest oil producer in OPEC, has voluntarily on its own cut production by another million barrels a day. This is on top of what they have already cut last year and again in April this year. So we can see that OPEC Plus as a whole is trying to hold the price in energy markets, because last week we considered energy in terms of crude oil has actually gone below $70 per barrel, and that is a concern for the OPEC itself. So this latest move here caused price to rally as a knee-jerk reaction to the news of a production cut going all the way. Instead of ending 2023, they're going to extend it to end of 2024. So not only has they cut production, they have extended the production cut by another year going into end of 2024. So that caused the price to surge to $74.92 this morning. However, the price has come back down again. Now this area is going to be very, very key here. In my opinion, this is where the market may be actually basing for another assault beyond the May high at $76.07 towards a possible target of $80 per barrel, at least in the short term. So do watch out for extended rally in energy prices. Over in precious metal, we saw last Friday we saw these spot gold prices actually collapsed by more than $30 per ounce and came from a high of $1,983.50. It actually went down this morning, continued that slide, and right now we are at $1,944, and there is a possibility it will go and test the $1,932.10, which was last traded on May 30th. And this being the case, I think the market may actually break this level towards the 1900 levels. So do watch out for further losses in these precious metal prices in relation to gold. This is on the back of a resurgent dollar. So we have to watch out whether the dollar strength is going to be maintained. If it does, then gold prices is likely to continue to decline. Okay. Over in the silver market, we also see a climb down from a high of $24.02. Currently, it is trading at about $23.54. Although the slight in silver is not as dramatic as what we saw in gold market, but that basically is setting the stage for further decline. In the meantime, we can see how the market reacts if the market go and test this line here, which is a near-term support line. So if this market close below this line, there is a possibility it will go all the way down back into this bracket of prices, which has last saw the re-emergence of buying interest, which is $22.28 to $23.02. So this is a wide bracket. So I think there should be some kind of buying interest accumulating around here. Okay. Over the dollar, we can see that earlier on we see the dollar resurging on Friday itself back to a high of 104.15. Now this is where it gets interesting. Technically, the market has come off of 104.62 to 103.32. So this market now is moving back into a possible into a corrective bounce. From here onwards, there is that technical possibility the market may slide down from here. So from a risk reward perspective, this offers a good trade setup here, in the sense that if you can sell somewhere between 104.13 to 104.33 and putting your stop just above 104.75, for example, because there is a March 15 high here. So place it above that level and you can take the market down to at least 102.55 to 103. Okay. So although the risk reward in terms of what we call the risk reward ratio is not fantastic, but it is still a fantastic setup. Okay. Now over in the currencies, we can see that the euro has actually rebounded on the back of dollar strength, and a high of 107.78 was actually traded on Friday. The market has since pulled back to 106.90. Now this level, if you flip it, it looks like the dollar index, but on the reverse. Okay, it's a mirror image. So if the dollar is likely to come down from where it is currently trading from 104 levels, there is the possibility that the euro may actually rebound. So if this is a rebound, technically there is a possibility market may go back and test a 108.85 to 109.35 levels. So what I'm trying to say that if as much as the dollar index offers a great selling opportunity, there is the possibility of a great buying opportunity in the euro versus the dollar, and target is 108.85. Over in sterling, we can see that the price has actually finished its three-wave rally, hit a high of 125.45, which is which is just marginally above my ideal selling price between 124.90 to 125.40 levels. So the market has actually come down very aggressively, but incidentally, the low traded so far this morning at 124.26 is actually the 50% rally from 123.09 to 125.45. So this is an interesting development. From here, maybe the market may actually offer a bounce back to 124.85 to 125. Now again, if you are going to be short-term bearish, this area here between 124.85 to 125 may actually offer a short-term selling opportunity with a stop likely to be placed above 125.50 levels. So target is for the market to revisit the May low at 123.09. Okay. Over in the Aussie market, we can see that Aussie also have a very strong rally all the way up to 0.6635 before it hit any kind of resistance. Now this area previously, if you remember clearly, I mentioned this 0.6640 to 0.6680 being a likely area in which selling interest may re-emerge, and it has been, because market hit exactly at a point here at 0.6638, and immediately it has been kept. So going forward, if the market do pull back all the way to 0.6530 to 0.6550, that area may offer you another buying opportunity for another assault of this level here. Although the risk reward isn't as fantastic as in the euro versus the dollar, or even the sterling versus the dollar, this is still a setup nonetheless. Okay. For those who are wanting to take a little bit more risk, the dollar CAC may actually offer us a great setup, because the decline in the dollar against the Canadian is a lot more dramatic compared to, let's say, the other major currencies here. As you can see, the dollar Canadian actually tests the most recent high at 136.55 with a high at 136.51. That is on Wednesday itself, and market come down all the way to 134. Now market is now sitting just above this level, which is the mid-May low of 134.04. So if we get a bounce back here into 134.75 to 135, this area may actually offer a short-term selling opportunity, although the risk reward is not fantastic, but it may actually see an extension of this decline all the way to challenge the most recent low here at 130. 133.15. So that offers another selling opportunity in the dollar versus the Canadian. Now, dollar yen is also at a crucial point. Dollar yen has a rebound from 138.40 all the way to 140.26 on this morning, and this area is going to be crucial. I think the market may actually see the re-emerging of selling interest from this level, anywhere between 140 to 140. 20 levels here. So this is actually quite a great setup. So if the market do pull back down, that will be the confirmation that I need. If the price can actually have a 4 hour, this is a 4 hours time frame, by the way. If we have a close below, let's say for example 140.95, then that could be my a cue to go in to add position. I'm already short the dollar yen, so I just want to see if this offers another selling opportunity. Immediate target though is going to be a test at 137.40 levels. So this could be the immediate bottom here, but if the market can extend below here and close below here, it offers a possibility of an extended decline all the way to test the May low at 133.50. So this is going to be a much bigger drop here if that's going to be what it's going to do. Okay. Over in Bitcoin, we can see the Bitcoin rally up to 27,451, and that's it. Market is coming back into this bracket of prices between 26,430 to 26,860 levels. So this level here has been supporting the market quite well. There's every possibility it will continue to do here again. Buyer has been seen to be accumulating position around this bracket of prices, and that could set the base for another assault at the 30,000 levels over time. So this is at least for the time being a bullish setup, if anything. Okay, so this is all I have for you for today. Now remember, this week we're going to have a lot of major numbers, especially the GDP as well as the inflation numbers coming out for various nations here. So do watch out for those numbers as the week progresses. In the meantime, you take care, and I'll see you tomorrow. Bye bye. Take care.